Hi everyone, it's that time of year again. It's the holidays, and it's also an opportunity to be smart about tax strategies, right? So it's a year-end tax strategies is what I'll be talking about today. Specifically, I'm going to be talking about 7 smart tax strategies for Canadians and how you could maximize your savings before the end of year. The first one is your RRSP, contribution to RSPs. Now, I know the deadline is not now, but I always say if you could start to look at it, that would be great before the holidays arrive. That way you have that amount of money put aside so you could contribute to an RSP. Now the benefit of contributing to an RSP is that it reduces your taxable income. So for example, if you made $100,000 per year this year and you contributed 10,000, effectively your taxable income goes down by 10,000, so you're not 90,000. And a contribution that you have made as an employee throughout the year, the government looks at that and provides you with some tax refund, right? So it lowers your taxable income. So I always say if you can consider and look into that now and put that money aside before the holidays arrive, you'll be less tempted to dip into that, and you will have that amount of money set aside next year to put contributions into your RSP. The next one is tax loss harvesting. And essentially this is where you look at investments, for lack of a better term, we call them dogs. The investment that haven't done so well and haven't been doing so well and you're planning to get rid of. And the opportunity here is for you to sell those investments if they're in a non-registered investment account, and you could receive capital loss, and you could use that capital loss to offset any capital gains. So there's an opportunity there to reduce your overall capital gains for the year. No, this is not me saying you should just run out and just start selling stuff just to lower your taxes. No, this is where you look at portfolios that haven't been doing so well, and you said you probably want to get rid of it. If not you individually, I'm talking here, maybe you're working with your financial planner, your financial advisor, your investment advisor. You have some conversations. If you're going to do it anyway, you probably want to do it now while you're within the year to take advantage of that from a tax standpoint. Next one is contributing to a TFSA. Again, there are not really a deadline here, but the opportunity here is still, if you're looking about saving on taxes, and especially if we would have sold some stuff and gotten tax loss harvesting, and we have some investable cash here, the opportunity now is probably to put in the TFSA. Why is that? Because the TFSA, you have tax advantage growth in that the money grows tax free. And if you do pull the money out, that's also tax-free. So the huge benefit there is still to consider tax-free savings accounts from the money that you do save or money that you do receive at this particular time, especially if you're getting bonuses. Opportunity here is to put in the TFSA and have it grow tax-free. Another one is making charitable donations. This is great. This is a great way to save on taxes, but beyond even saving on taxes, a great way to contribute. Now, approximately, don't hold me to this, because depending on where you are and your circumstances might be different. But for every $2 donated, you get a $1 deduction. That's kind of what it works out to roughly. Again, you're going to speak with your accountant, your financial planner, just to make sure you're on the right track here. But the opportunity, nonetheless, is that if you want to contribute to your charity, now would be a great time, an appropriate time to do that, especially after looking at your income for the year and realize that you could be in a much better situation if you lowered your income. A charitable tax donation may be an opportunity to do that here, and there are several ways you could donate. You could donate via cash, you could donate via securities, you could donate via insurance. There are multiple ways. Reach out to myself or a financial planner and you could go over that. But just know, as a category, making charitable donations are a great way before the end of year for you to save on taxes. The next one is to pay family expenses eligible for tax credit and deductions. So a good example of that is if you have kids and there are certain things you're going to pay for. There's certain activities and certain programs that absolutely sure that that's something that your kids are going to participate in. And there are relevant credits that go along with those activities if you pay for them. and you look at your income for this year and you realize, well, you know, I could use some help in the tax savings department. There's an opportunity to just pay for that now if that's available, because it's something you're going to do anyway, and have it paid now so it goes towards this year and lower your income, and you have some tax savings there. Next thing is to optimize income splitting opportunities. Now, if you are a spouse and you're in the higher tax bracket, and your spouse in the lower tax bracket, and you want to transfer funds to your spouse without having that income earned being attributable back to you, one of the strategies that you could do is a spousal loan. What does that look like? That looks like treating the money you're giving to your spouse as you would an individual that you have never met, and you want to loan them money. What would you do? You'd have an agreement, you'd have certain interest rates in place, you'd make sure you get payment. Then that's exactly what you would do here, and so it's treated like a loan. The benefit there is that the money doesn't get attributed back to you, and your spouse who's in a lower tax bracket, when they earn income from that investment, then there's an opportunity there to save taxes. You know, and there's also the aspect of family trust, you know, where you can split income among family members. Won't go too deep into that, but if you have a family trust, something you want to consider and talk about. Lastly, for saving on taxes, another thing you can consider is if you're self-employed or you have a small business, there's certain expenses that you could pay right now. And again, these are expenses. You're not just doing this just because, oh, I just want to save on taxes, but these are expenses that you know legitimately you will have to pay, or you will have every intention of paying next year, and it makes absolute sense for you to pay this year because you have an income that you want to lower. You know, opportunities there to prepay some expenses. Now, overall, went over 7 things, just over 7 minutes so far, and you know, there are a lot of moving parts here, and the tax law can be complex and things change frequently. I don't recommend you just take this and just start sending money here and deducting here and doing this because you think it's going to work a particular way. The bonus advice I have is to speak to a tax professional, speak to your financial planner, speak to someone like myself, speak to your accountant, just to make sure you have the proper advice. But one thing you want to do is you want to be proactive, because if you do take steps, then the opportunity is for you to save, you know, thousands, possibly tens of thousands, depending on your situation, maybe even millions of dollars by implementing just a few of these. And again, there are tons of other strategies, but I kind of kept it at the 7 that I think are most popular at the moment. Hopefully this was helpful. If you thought it was helpful, like, share, subscribe. Catch you soon. Take care.